no blue is not enough.
Hey guys, so in this video, we're going to quickly go over how I use volume in my trading and go over the example today, as well as we'll go over the end of day because why not? But volume spikes and volume in general is a very, very simple thing to integrate in your trading. You're just going to turn on your volume indicator. And people use volume in the incorrect way when talking about retail trading. You need to do the complete opposite of what they do when looking at futures. So you're going to want to do it on like a 1 minute chart. Although this works on higher time frames as well, I use it on a 1 minute chart since that's what I'm trading most of the day. So first things first, volume at the lows, for example, right here, you can see big spike in volume right at the low, creates a hammer candle, and that puts in the low day for the morning session. So volume at the lows paired with liquidity will give you long entries and long trades where you can literally buy low a day, risking a static 2 to 4 point stop. Or if there's like a hammer candle like this, you can buy the hammer candle break with a stop below the hammer candle, and that's the trade. It's that simple. So you're going to have potential false signals, and that's where bias comes in. And in this case on ES, you're going to see there's another somewhat substantial volume spike here, coming off low day, puts in a hammer, and reaches for its first liquidity, right? So the trades will work, but it's not always that they put in low a day. And when you get a big volume spike like this, that is very important to pay attention to, because those big volume spikes are going to put in the lows and highs of the day more often than not. Some days where volume is incredibly low, you will not have good volume spikes, and that's something just to note. There's no way to get around it, but having a bias and not solely just looking at volume spikes to give you trades will help with that. So what I mean by that is, if you get a volume spike right here, although it ran liquidity, and yes, this trade did trade higher, you're going to notice we kind of just went sideways, and this spike in volume just occurred within that previous candle. What we want to see is the spike in volume to actually come in underneath previous lows or above previous highs. So in this example, we'll actually go to a 15-second chart, and you can see it coming in. So first of all, you can see volume spike, put in the lows, trades higher, comes back to those lows, and if we just skip forward, big volume spike on this candle. You can buy that candle as it looks like that. That can be an entry right there. And you can see if you pair that with ICT ideas using that 60 level, that's important. You can see they are accumulating positions at the 60 level. So what does that mean? You use a stop that is 2 to 4 points from wherever that's occurring at. So in this case, I would say it's occurring at the 60 level. So I'd be using like a 56, which would be a 4-point stop. And this is pretty much how order flow traders trade, except we're just using the volume spikes. So if we play this through, you can see it has that initial reaction, and this low then should not really get taken out. So you'd move your stop up. And then you can see we get the breaks higher. And this is where ICT traders, you'd be trying to long somewhere in here. And this is already long down here from the volume spike, which is why I include it in how I trade, because it's so strong in that sense. If we let this play through, you're going to see we trade into the highs. So if we go back to a 1 minute, now this is where bias comes in as well. So looking at this, if you understand the market maker buy and sell models, you're going to see consolidation. You see areas of liquidity higher in the form of fair value gaps or just previous highs that need to get taken out. So you'd instantly be targeting those. So if we go and just, this is your accumulation. And since we are bearish on the higher time frames, this would be where the start of the accumulation that creates liquidity that we're going to revisit later in the day. So if we now play this through, you're going to see secondary accumulation. So to draw this to make it make a little bit more sense, I would draw it as this is your initial accumulation that creates the liquidity we're going to return to. This is your secondary one that creates relative equal lows. And yes, this was something I called on stream actually before I got off. I pointed out these lows and said we're probably going to take those out later in the day. But all that means is we're still range day because we're inside and stuck. So we'd redraw it like this. So now your range is a lot bigger. And coming into the afternoon session, I'd be looking at these lows to potentially get ran. If given a setup anywhere up here, which right now we're going to shoot around the 15ers, but I'd be looking at these, and then you have this imbalance down here and the lows of the. So now that you've seen that clip, you can see we were pointing at those lows, and the reason is the buy and sell models, you're always going to be targeting these as liquidity in the form of these lows and then under those lows as well when the sell model starts coming in. So if we now play this through, you can see what occurs right at high a day. So if this is our accumulation and we're looking for manipulation and distribution lower, what occurs at high day is this large volume spike here. So when you get this large volume spike, although you can see we had this one here as well, you don't need to short it instantly. In the case of if you did short this one instantly, you'd be shorting here, 15-minute chart. You're at the 15-minute breaker block, or you could call this the order block. And now it already kind of gave you the hint of where we're going. But you get that second volume spike at the highs. You could just short that as your volume spike. And this would be probably shorting right here with a stop at the highs, since you're shorting at the low of the candle instead of into an up close candle. And that would have worked perfectly fine. But let's say you didn't get that. What the volume spike will allow you to do is now we know that this high is likely to be put in, and this level here is likely to be where prices are going to reject from. So we want to go and look for breaks, shifts in structure lower with fair value gap entries, right? So we trade the 15-second chart at stat trading, and now you can see where that volume spike actually occurred, right into high day. So since we trade volume spikes, and we also trade the lower time frames, if you miss that, you can trade the lower time frame. So what do we need? We want the low that made the high. So in this case, you could either be using this low, or ideally I'd use this low. So we'd look for displacement below to break structure as a market structure shift. And then we'd look for a move into a fair value gap, or in this case, we actually had fair value gap here and volume imbalance up here. So you'd be shorting somewhere in here, risking this high or even high a day, depending on your risk management. And it would be something like this, risking about less than 2 points, or risking high day, which is also less than 4 points. So still a good risk reward, and your first target's always going to be liquidity or imbalance in discount. So if we go and draw our premium discount range from low to high, you can see in discount, this is liquidity, so that's your T1, and that's going to be a 1 to 5 risk reward trade. If we let this play through, you're going to see there's a silver bullet entry given as well. And there's T1 hit. T2 would be low of day. And you see we consolidate around. This is reaccumulation for lower. Now you get the box set up where aggressive move higher, aggressive move lower, shift structure, fair value gap or order block in here. Comes to the downside. And then there's the trade. That's completely done from high day to low day. And this is using volume spikes as well as secondary analysis. So if you see the volume spike indicator or alerts that are occurring in futures chat, and for those that may or may not be interested in what I'm talking about, you can see volume spike at the low, volume spike at the high, right? So just a volume spike indicator that alerts people to when the volume spikes are. This is how you're going to want to use them. You don't want to just buy and sell them willy-nilly, although it can work. Like in this case, you could see volume spike at the highs, sells off, volume spike at the lows, trades higher, volume spike at the highs, eventually sells off, and then you get volume spikes inside the range, which we would ignore those. And then we'd look for them coming in at the lows, which in this case, that one didn't come in at the lows, etc., etc. At the highs would have stopped out if you just randomly took it. But I digress. This hopefully just explains those volume spikes, and I guess we can go and look on the 1 minute to see the ones at end of day quickly. And you can see prices trade lower. There's no shifts in structure or anything. There is volume spikes here. It does trade slightly higher, but there's no shifts in structure or reason for us to believe it's going to go higher. So there's no reason to touch it. And if we now trade higher, we have a shift in structure, spike in volume, except this is a shift in structure. So you could short that, but you'd only short into liquidity that is sitting in discount. So in this case, you'd either be using this as your range or you'd use this. So you'd be looking to short from here into the fair value gap that is sitting in discount right down here at 53. So if we let that play through, you can see it reaches into 53, reaches for lower liquidity. You have a spike in volume aggressively right at this low while reaching in the fair value gap, acts as confirmation, trades higher, right? So this is why I want to have that volume spike indicator in the Discord, and why we just added it to the Discord today, actually. Because when you get those spikes in volume, it tells you to be looking at price, because when there's aggressive order flow, that's when the aggressive moves are going to follow. And if you let this play through now, you get another shift in structure. And you can see prices, higher highs, higher lows. You can see those highs, volume spike, and then comes in, liquidity for value gap, and then trades higher. And then in this case, you can see it reaches into order block, volume spike at the lows, trades higher. There you get volume spike at the highs. That could have been a scalp trade, very simply. Another volume spike at the highs. Great example again. You can short this with a stop above, and you target imbalance in discount or liquidity in discount, and you're going to see trades into that. And you have a volume spike to close that position in discount from volume spike at the highs. So hopefully this video was simple and short enough for you guys. If you have any questions on volume spikes, I can make like a longer video. This is really just talking to my Discord people, how they should be using them in congruence with analysis. But hopefully that makes sense for you guys, and I will see you guys in the next video.